I'm Jessica Minton for IBTimes TV, and I'm joined by Jonathan Corpina from Meridian Equity Partners, who's going to weigh in about the latest economic data as well as tomorrow's jobs report. Thank you for joining us.
Thank you.
So we've seen the Dow this week hit these record highs, and the last time this happened was in October 2007, shortly before the recession began. How long do you think this can continue, and can it be sustained?
I think this is going to continue for a longer period of time than people actually think. If you go back to where we were in 2007, I think our economy was much more fragile than it is right now. So we've learned a very expensive lesson over the last 5, 6, 7 years as to how to spend money, how to borrow money, and where to put money. So I think what's happened now is that as we've gotten back to these levels where we were in the past, I think the euphoria is there, but I think people are still a little bit skeptical as to whether this is going to continue, and I think that's good, because back in 2007 we thought the sky's the limit, this is going to keep going on forever. So it's good to have this little bit of a fear factor where you think the market is going to pull back, but I think the economic data that we've been seeing over the last 6, 7, 8 months has supported the rally that we've seen and has shown stability in our markets. I think the crisis in Europe has quieted down a little bit. Doesn't mean it's going away, but it seems like it's a little bit more under control. We've gotten past some serious dates on our calendar. We put the election behind us. We've had the fiscal cliff behind us. We've had the debt ceiling behind us. Not that those problems have gone away. They're just a little bit corralled at this point right now. But I think overall this market wants to move higher and is going to continue to move higher. Over the past few weeks, we've had many reasons why this market should sell off. And what we've seen is very short sell-offs followed by a rebound in the market. It shows me that this market is strong and will continue to move higher. I just like it moving at a very slow pace, not a very rapid pace.
In China, we're watching this leadership change go on this week. What do you think this means for the global markets?
Clearly, there is a correlation between what happens economically, politically, between all the major countries that are out there. So it's something that we watch. It's something that our markets react to. In the past, I think our markets might have reacted a little bit more to a change in a shift in power in other countries, and also when you're talking about other crises that have occurred in other countries. But I think now it's more of a wait-and-see approach that our markets have already built into any sort of political change that we're seeing in other countries.
The ECB announced earlier this morning that they're leaving interest rates unchanged. Now, last week we saw unemployment in Europe hit another all-time high. Do you foresee them cutting rates anytime in the near future?
They're going to have to do something, and I think what they're going to have to continue to do is look at the blueprint that we've had in place here over our crisis. Countries need to communicate a little more with each other. There are different experiences in different countries, but it's all the same lesson that we're all learning, is we have to get jobs back in order. We have to get more money into the workers' hands, because from there we have spending, we have rebounding in housing. There's many different factors that are out there. It does start with interest rates. We've always had the conversation of, well, when are our interest rates going to rise higher? We're getting closer and closer to that point. I don't foresee that happening soon, but clearly we've shown our stability in our economy where at least that conversation can be on the table.
Now, moving over to U.S. news, how do you think the sequester will affect U.S. manufacturing?
That's a very interesting question, because when we went through the concept of the sequestration and what was going on in Washington, that had ripple effects all throughout many different industries that are out there. And even from the perspective of the investing public, trying to figure out, well, exactly how is this going to affect me? How are things going to, what's the landscape going to look like moving forward? I think from the manufacturing side, there's clearly going to have some ripple effects that are there. This is still new, right? We're only 7 or 8 days into this, and I don't think we're going to see the true effects of this now for another month, maybe another quarter. So this interim, I think it's going to take companies time to figure out what they think the effects are going to be for them individually and how they're going to prepare for that moving forward. And hopefully in time, there will be a better resolution that's going to be put on the table by either or both parties.
And finally, the U.S. unemployment rate is coming out tomorrow. What are you predicting we'll see?
I'm predicting that we're going to see the number to stay flat. As many headlines that have been out there that would support that this should be moving in the wrong direction, I do think that there are some stable factors that have helped our job numbers at this point. Yes, with the sequestration, we're going to have those job effects down the road. So I think right now the effect isn't going to be felt in this number that's right here that we're going to get tomorrow. But the market is smart enough to price that into what we're seeing already and what we're trading already. So even if we get a surprising number, I don't think we're going to have a big effect on the market either way. I think we're going to continue the stability that we're seeing.
Thank you for joining us, Jonathan.
Thank you. Always a pleasure.